All right. Hey there. Good afternoon, or I guess good morning, everybody. It always seems like it's afternoon. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 30th of August, 2022. I am Christopher Inks with Texas West Capital. Good to have you all checking in here. I'm coming at you live from a very overcast, kind of burning morning over here, trying to get everything settled. So we can do our relocation to Houston next week, which will be pretty awesome. And then, like I said, from there we can look at starting to get together, with maybe some local meetups there every other week or something like that in the Houston area. So I'll let you guys know more about that. Real quick here, I had mentioned last week to follow me there on TikTok for something that I was going to do this week, and we had issues with the account, guys. So I've had to create a new account. Thank you, TikTok. So what I need you guys to do, there's the account there, Texas West Capital there on TikTok. Okay, new account. And so here's what it's going to be, guys. What I'm going to do is I'm going to do a week of free signals, guys. So we've recently launched the signal services that we do, and so we're going to promote it. So I'm going to do a week of free signals. These are going to include stocks, crypto, forex. So all you have to do is follow me on there to get them. And if you don't like TikTok, it is what it is. We all make decisions in life, right? But I figured that is probably the best platform to kind of make this happen in the way it's done. So by the way, guys, let other people know, because here's the thing: the more people that are following me on there, by the time we start this next week, the more signals I'm going to put out. So yeah, so get it out there, let people know about it, and we can exponentially increase that. By the way, something else I'm looking to add into, we do the signals, we do all this stuff, but people still want to actually trade what I'm trading, when I'm trading it, how I'm trading it. So I am actually putting together a course, guys, that you can get that is actually going to show you how I trade personally myself, my system. Now, I've held off for almost 5 years now not to actually show this, because I don't want you to go out there thinking, oh, there's just one way to trade it and that's it. So I've made it, my business so far to teach you how to trade properly in all these different ways, right? But people just keep on and keep on about it, so I'm going to do this. I'm going to release that. And additionally, looking at potentially, if there's enough interest, I might do a trade with me subscription. And basically what you would get is I'd let you know, ahead of time before you ever subscribe or whatever, what hours of the day we're going to be trading, what we're going to be trading, what market we're going to be trading. And you can choose if that's something you want to join in on. So just trying to give you guys what you're looking for. If you don't like it, that's okay. You guys can do what you're going to do. It's not something I'm telling you have to buy it, but or you have to be involved in it. But, again, everybody keeps asking. Been doing it for 5 years now. They've been asking, and so I'm finally going to break down and do it. So, if there's interest there for it, enough interest, I'll go ahead and do that. So, just kind of a heads up there, guys, okay? Hey, listen, you can join us here at howtotradetowin.com. We'd love to have you here. Just head up over here to join us. Click on there. You can join the signal service. You can join the educational system, all that kind of stuff. It's all in there for you guys, right? Who's here already? Bamboo, what's going on? Data's here. Name Mr. Wilkes, LXT, Jonas. Good to see you guys here. Let me see here. The real Go-Go. Hey, what's up, man? You said your big boy shorts are on today? Love it. I love it. Higher low, what's up, man? You said you pretty much like how I trade, and it's the only way to trade, but you're biased. I'm glad to have it. But yeah, so that thing I'm going to be putting together, that course I'm going to be putting together, is actually going to tell you guys exactly that. It's going to give you, there's really no thinking on your part. It's going to say, listen, here are the rules. If price does this, then you enter at this point, your stop loss goes here, and your target goes there. And, it'll tell you what you're looking for, how you're looking for it. It's not overly difficult, guys. I'm really distilling it down to something really simplistic, where even if you're not, some people are worried, oh, well, I don't know Elliott Wave, or I don't know, Wyckoff or something like that. This is, again, much more rules-based. If price does this, then you enter here, your target's here, your stop loss is here, kind of thing, right? So not really, again, a whole lot of thought that you have to put into it, okay? So yeah, anyway, there we go, guys. Matthew Balls, what's going on, man? All right, guys, so I'm going to go through this, and I might go a little quick here today because for whatever reason, my streaming software has been having issues for about the last, about the week or so. You can ask my tier 3 members. So it might shut off on me. If it shuts off on me, guys, it is what it is. I'll see you Friday. But hopefully we can make it through, okay? Andrew Bennett, what's going on, man? All right, so here we're going, guys. So I've got this count right now, and it says potentially wave 2 is maybe done down here, right around 19,513.74 here on Coinbase, okay? So I've got 1, 2, 3, 4, 5 up. Our target was this R1 pivot area, so we basically hit the target. That was our target, yesterday, going into yesterday evening. And then we've got what may be a leading diagonal for A, and then B, and then maybe 1, 2, 3, 4, 5 here. Finish C. Dipping a bit below. I mean, it's really kind of finding support around that 78.6, which is the S1 pivot on the 15-minute. But it did wick on down here to 85.4. So because of this, I have added in the alternate count, which I've been discussing here lately as well. And so the alternate count says, okay, maybe instead of this being 3, 4 here, maybe this is ABC coming down for W and then X, and then this is A, B, and we'll have C as for Y, right? And so if this count is correct, we're going to get a breakdown below the swing low here, and we'll look for a target of this large blue demand structure EQ here, right around 18,240, right around there. Okay? Now, right now, I've still kind of got the count on the rally up from the June low as a 1, 2, 1, 2. The alternate count suggests that it's all just 1 as a leading diagonal. So if we're breaking down below this swing low here, that's probably what we'll be looking at rather than the 1, 2, 1, 2 as we look to, have this finish out here. Now, as you can see, we got a deep drop down here for the 15-minute into oversold there. The 1 hour, we are bouncing right at oversold on RSI. Stoch RSI bottomed out there and oversold. Okay. 4 hour. Now, the 4 hour, we're up here with Stoch RSI. We're up top. But, again, you can spend some time going sideways, right? We went sideways here all the way across this. What is this? From the 21st of August till about the 25th of August. So 4 days going, sideways there. So entirely possible for this to stay up here, okay? So I'm not overly concerned about it at the moment. We'll watch what happens with the price action. What I don't like is that big old 4 hour candle there. I don't like that. Doesn't guarantee we're going to go down lower, but definitely want to watch it, okay? Now, the reason why we have this target here for wave C at this wave Y here is because at that point, wave C would equal wave A, 100%. Now, it doesn't have to get down there, okay? All we need is 5 waves down below the swing low here. So, looking at this right here, it's possible we could get, if it was to break down, that wave Y could end right here at around 18,740 or so. So watch that first as an initial target, and if we continue down lower, then you can look at that EQ there. Right now, we're just in this nice kind of descending channel here. And so that EQ working real well here as, resistance right there, and support and resistance. So we'll see. If we can get a breakout of this descending channel resistance here, that's going to be a big clue that the bottom's probably in, if we get that. Wave 3 right now, let me see here, with this move down as low as it did. Wave circle 3, if this count is correct, and wave 2 is done there, wave circle 2. Wave circle 3 has a minimum expected target right here at about 21,388.5. So we moved down just from the EQ of that 4 hour supply structure there to 21,388.5. And so as you can see here, now, if this count plays out, I like this. Why do I like this? Because wave 5 is going to be up here at around 21,796, which gives us, as we always look for, our first subwave up that terminates around the previous swing high there. So, if this is wave 4, we would expect this rally up. The first subwave ends right around that resistance, and it would, as you just saw there. So that's what I'm going to look for. So what do we want to see? We want to see a breakout above wave parentheses B here at 20,450. We want to see a breakout above that. If we can get that, I'm looking up here at least, okay? Now, this is the initial target. Secondary target is that wave 5 target, so up there around that 21.9 area or 21.8 area, whatever that was. That would be the secondary target. If, however, we get this rally up here to this 15-minute pivot and we get rejected and it starts coming back down here again, that should have you on notice that we're probably going to break down and we're looking at the red count. Okay? And then once we break down below the swing low here, that'll kind of confirm that, okay? So there you go. Nevlusian, good to see you as always, man. Let's see here. So yeah, so that's what we're kind of looking at there. Andrew Bennett wants to know if there's a descending wedge here. I think you're looking at this right here with this. I mean, it would look like it, right? But, again, if it's corrective, it needs to be an ABC. And I don't know, do you get an ABC out of that? In that case, that's the WX and maybe Y. Could be that finishing out, right? But that's way down here, so I don't know. It seems kind of low down there for that. Excuse me. It seems like it'd be closer to kind of this area here, right? So, we'll see. We'll see how it plays out. Now, I love the daily. Daily looks really pretty good. Here we go with our daily. As you can see, we dipped down here on the RSI, dipped below into oversold here and came back out. God dog it. Come on, there we go. And then, of course, we bottomed out here in Stochk RSI. We've crossed bullishly, nearing a breakout of oversold. We're finding support on that daily S1 pivot area. We've got a bullish engulfing candle. From back here in the June low, every time we've had a bullish engulfing candle on a decline there, it's always led to higher. So here we go. Here we go. Every time, right? Now that was all in an uptrend in here as well. So, we'll see if this holds true here and we rally back up. Really, guys, that's as simple as that. What's going on, Brian Riley? What's going on, man? Purple range on the end, potentially, Andrew. Yeah, potentially. So this is what we're going to see. We're going to see, can we, if I'm watching this here, I'm looking, can we break out above that 15-minute pivot? And if we do, we need to break it above wave B. And if we do that, then again, I do believe we rally up out of here. But we should get 5 waves up toward this R1 pivot, this wave circle 1 kind of termination area. We should get 5 waves up to this area and then pull back. And then you'll get 3 of 3 breaking out through, right? So 3 of 3 is usually what you get when you're breaking through significant, an important area of resistance or support. So in that case, that would be that descending channel resistance. So we'd look for a nice move up with that, okay? Let's see here. Let me go ahead and bring you guys up to the updated BLX here. I don't know if you guys are following me there on Twitter. Let me see here. Which one am I looking for? Yeah, I think this one does it. I think this, almost, not quite. Let me see here. You know what? Let me get the link here from Twitter here. Just want to make sure it has all the info on it for you guys. Oh, let's see here. Okay. And we'll just go ahead and put it right there. All right, and we'll talk about it here, okay? So again, previously, the BLX here, guys, this is the I can't even say it right. Anyway, Brave New Coin Liquid Index. And so what are we looking at now? So what we're looking at here is every time on the weekly, which has only been twice before, right? It's been January of 2015, bear market low. December of 2018, bear market low. At those points, RSI has closed down in oversold. Those are the only 2 times in Bitcoin's history it's done it, okay? Here we are again, June 18th, breakdown into, or June 13th, the week of June 13th, okay? So that's that June 18th swing low. There we go. Right down in there, okay? The orange line is the 200 MA. And as you can see, we kind of dip below it, kind of hang around it, dip below it again. So it's this back and forth, up and down over it. Over here, we kind of found support on it. Here, we spent a little bit more time under it, but it's similar to what we had here, where we drop below it, we rally back up above it, we're dropping below it, we're just kind of hovering around it. So for now, it kind of is that the 200 MA is holding as support for now. If we get a breakdown below that June low, of course, that will invalidate that idea. But these are things we're watching, right? We're noticing that, again, I pointed out that the Stochh RSI and RSI look the same in those two places. And here we are up here, right? So in every case, it's kind of broken up into this, right into or near this overbought area. And here again, right? And so when it does that, it pulls back, and then it goes up higher. Now this one had had an elongated sideways, and even dripped a little bit lower though, but still stayed above the swing low. This one here, you can't see it on this, but the weekly just pops up and it leaves a wick and comes back down, and then it turns around and follows up over the next few weeks and breaks out above it. And so here we are with this one, of course, as well. We've rallied up, hit that overbought, pulling back. So we're pulling back now. So the question is, are we at this same point where we pulled back before price rallies higher, right? Finally, the other thing we're looking at here are these green and blue lines, right? So the green line is the, let me think here. The green line is the, oh my gosh. The green line is the, I can't even tell. I'll tell you right now. The 50. That was what it was. I was going to say it was the 100. So the green line's the 50 moving average. The blue line is the 100 moving average, okay? Now, again, on these previous bear market lows here, it's all we have information for, unfortunately, guys. Doesn't do anything prior to that, okay? But here in, in 2015 and then here in 2019, after these bear market lows, the fast-moving green line, the 50, has moved below the slower-moving 100s there, okay? Now, this happens after the price bottoms out. Okay. Currently, this is set to cross that same way this week. Okay, Hank, Poison, what's going on, guys? So again, we want to see, do we get the same effect that we've had in all these areas, these previous two bull markets? Do we get that same effect here with everything looking quite similar? Now, does that mean that that it's definitely going to happen? No, of course not, guys. And am I actually trading based on this? No, not at all. You guys know that I've bought down here and a few other times. But this is just some stuff that I happen to notice, some indications that were that have repeated the last few times, that may be potentially repeating again, okay? By the way, you also have your hash ribbons here, right? And so after every low, bear market low here, right, you end up getting those, you can't really see it here. There's a lime green in there and then a blue buy signal, right? After this low down here, you have the lime green and your blue. Here we are, lime green right here. Now, what does lime green mean? So in these, in this indicator here, the gray dot on the hash ribbons is capitulation. And then sometimes you'll get a darker green. You can kind of see it in there a little bit. You get a darker green, which is showing some finishing up of the capitulation, some beginnings of recovery. And then you get this lime green bubble. This lime green bubble is the recovery point. At that point, price should be heading up now. And then it goes up a bit further. It has to do with the 30 and the 60 cross. And then you get your blue bubble, which is your buy signal, right? So according to hash ribbons, we should be at or near the low area here. Okay? So that's, these are just things that I'm looking at, things that I found interesting. Again, to me, it does seem that we had capitulation. We had market capitulation here. We had over-leveraged unwinding here from Three Arrows Capital nonsense right here, okay? So, again, if that's correct, and that aligns here with the hash ribbons, which says capitulation and now recovery, then we should be looking to go up, right? People will get scared. They'll look here at the Stochh RSI, and they'll say, oh, no, we topped out. Now we're coming back down. But again, same thing. In this case, it stayed overbought the entire rally from like 4,000, 3,800 or whatever, 4,000, up to almost 14,000. That daily Stochh RSI stayed overbought, right? So, again, longer time frames stay on there a longer bit of time. But in every one of these, as I've pointed out, in every one of these, it looks the same here, right? So you get the rally, you have your swing low, right? Your bear market low. You rally up, you pull back, and then you go up. You rally up, you pull back, then you go up. Go over here, you rally up, you pull back, then you go up. And so that pullback is where where you get that Stoke RSI kind of cross area here, right? Where it crosses back down, starts pulling back down, right? So there we go. So that's what we're kind of looking at there as far as all that goes. We'll see what happens, guys. But, again, it does look interesting, right? And so let me see here. I had where is this? There's a report here. Let me see if I can find it here real quick, guys. Oh, let me see. All right. Let's see. So let's get this new window here. All right, let me get this off here so it's not bugging you guys there. But there is news from Bloomberg about Bitcoin. Let me see if I can find it here real quick. Let's see here. Sorry, guys. Give me just a moment. Hopefully these stupid news things didn't just change. Let's see. I do apologize, guys. I thought I had this set, but it looks like when I reset my computer here restarted it before for the stream, it looks like it did not take. Let me see here. Oh, apparently the container ship backlog outside of LA ports is almost cleared. Remember when we talked about that months back? So, if you guys are looking for inflation, I don't know, if prices are higher, at least partially due to supply chain issues, well, maybe there's not such a supply chain issue anymore, right? Let me see here. God dog it, where is that stupid thing? All right, give me a minute here. I'll find it. Let's do Bloomberg. Bitcoin news. Where did we do here? It was talking about a potential bottom. Let's see here. Man, you know what? I may not be able to have this for you guys at this rate. Bitcoin may have hit a floor after Powell's speech. Okay, so there's something. Let's see. What do they got to say here, guys? This is off Yahoo News. Let's see here. Bitcoin quivered but didn't fold after Powell signaled higher for longer interest rates to fight inflation. Again, I think that was probably more mouth than anything else. I think Powell's out there trying to get you guys to prepare for that potential thing, which would make that thing potentially not need to happen, right? If you go and you do the things which bring that down, then they won't have to do that, right? As I've continued to say over the years here, guys, the biggest thing the Fed has going for it is its mouth, right? It often says things more hawkishly or more dovishly than they really want to, or than what they normally should, in order to get you to do things that they want you to do, so that they don't have to do those things or feel like they have to do those things, right? Again, the idea that the Fed moves, controls the market direction is just silliness. They are completely not proactive but reactive. Let me see here. They said that the 6% drop is a smaller drop than traders are conditioned to expect in a volatile asset, roughly in line with the rout in the tech-heavy NASDAQ 100 index over the period, whereas in the past, Bitcoin losses have sometimes been orders of magnitude above the weakness in traditional assets during times of stress. So yeah, maybe, right? Oanda, which is a trading platform there, senior market analyst Ed Moya said Bitcoin's showing some resilience here. It's clawed back above the 20,000 level despite widespread stock market weakness. Crypto traders are not used to seeing Bitcoin withstand a rout on Wall Street, so this could be a promising sign. Could be. Again, not saying it definitely is, but just noting that usually, Bitcoin has a much steeper reaction than what stocks do. And in this case, it was basically in line with stocks. So is that telling us maybe that, that there isn't as much supply? Remember, when you think about things like Wyckoff, right? We talk about supply and demand. And so it has, in an accumulation range, the idea is that you remove as much supply out of retail hands as possible, so that way they don't have it there to sell it down and to keep the price down, right? And eventually it breaks out, heads up, and there's nothing they can do to stop it, right? And so, essentially that's what you could be reading this as, if that's correct, right? Let me see here. So he says, while the smaller swings might also support views that a floor is close, there are other indicators that caution against hasty judgments. For instance, seasonal trends peg September as a rough month, and traders are paying a premium for options protecting against falls below 18,000. So yeah, potentially, right? But this is also how accumulation areas also look, right? Accumulation areas are rife with this idea that price is going to go lower, and then it doesn't, right? Or it does so in the form of a spring, which is just a quick move slightly lower and then right back up into the range, right? So these are all still possibilities that are kind of sitting here. Just looked through other lenses, right? So we'll see what happens with that. Let me see here. Tell you, Ryder, what's up, man? CCP might copy trade me. Corey, what's up? Every time you come to watch my streams, you wonder why you don't tune in every time. Love your angles and knowledge bombs. Oh, I appreciate it, man. And, of course, we'd love to have you join every time. But, do what you can when you can. The one thing you're definitely not going to get from me is a bunch of nonsense, a bunch of smoke being blown up your rear end or anything like that, Most people understand it when they come here. If you listen, you're not going to get overly excited or overly depressive or anything like that. You're going to get some understanding of what I'm watching and why and what it could mean. And along with the ideas of, listen, here are the levels. Based on all this stuff, here are the levels. And so, yeah, I might say, okay, well, yeah, it feels like price wants to rally from here. But until we actually get above whatever level that is, it's still likely that it could go down, right? You have to have those validation and invalidation levels, guys. Esteban, what's going on, man? So, yeah, so we've got this going on right now. So we'll see kind of how this turns out. This is ugly. At the moment here, let me kind of zoom in a little bit. Let's see if we can see something before we move on to the DXY here. Well, I don't know. That's 5 waves up, man. It looks like 5 waves. Looks like 1, 2, 3, 4, 5 potentially. Maybe. We had a bit of bullish divergence here, as you can see on the 5-minute. Kind of leading to this rally up. It could potentially be ABC as W, X, ABC as Y as well. So definitely a possibility there. See, if I'm looking at this down, again, this looks like a leading diagonal here. This looks like 1, 2, 3, 4, maybe like a flat here, and then 5 down. So again, could be ABC, but that is a deep drop there. And, it gets us pretty close to the swing low, so we want to watch it. It could be 1, 2, maybe even 3, 4 here, right? If this is 1, 2, 3, 4, then let's see here. We'd have a target down here, wave 5 target of about 19,471, which breaks us down, puts us right, again, as always, first subwave right around the swing low, right? But, we'll see how this plays out. But that would then give us a rally. Oh, let's see here. 50% is up here around 20,020. So if we did get that breakdown to that level and you saw a reversal, potentially, at least the 19,889 area, and then potentially up here around 20,020, which is get you right around the 15-minute pivot, if it does that. Until then, we'll continue to look see if we can get some upside. Even if this is a WXY, it's possible this could be an ABC. So you get W, X, and you get 3 more up for Y, which again would get you this target area here at the 15-minute pivot. And as I mentioned with that, if we saw something like that, that would signal maybe this is a 1 and a 2. The rejection coming down gives us a 3. And so in that case, it gives us that 2.0 target, that wave 5 target right around where wave C would equal wave A right here, right? That would be our wave 5 target. If this is like 1 down and we get 2 up toward the 15-minute pivot, get rejected, come back down. 3 around 18,573. 5 down there around 18,220. Get you right around this EQ here. But again, remember, guys, all we need is 5 waves down below the swing low. If this was, for instance, wave C here, right? And so if this is 1, 2, 3, 4, just getting down here to that slight breakdown level we just talked about, that could be a very short C, and then you get this break move back out here. So you've got to be careful when you're trading. Don't just hop on thinking, oh, yeah, everything's fine and grand the way I'm looking at it, however you're looking at it, and that's all there is to it. Okay? So, yeah, we'll continue to watch with the levels we talked about there. Edward Park, what's going on, man? Maybe a double bottom right here? Oh, yeah, potentially. Me personally, I don't like all this sideways down around that swing low. There's a lot more confidence in a swing low that looks something like, like this. So you've got a more purposeful move down. I've just found over the years that when it looks like kind of like what it does here, so you get the move down, right? And you kind of do this sideways and then up, and then down. A lot of times it doesn't play out quite like we would expect. But we'll see, because, this lack of impulsive movement means there's a lack of really strong buying and selling in that, which is what we look for. The same reason why we look for those strong moves back and forth, 4 touches in a pattern, right, between support and resistance. We don't want to see price dropping along the midway of the pattern or riding along the support or resistance of the pattern. We want to see definitive movement between the pattern, support, and resistance, because that signals, hey, we've got much more activity, much stronger interest in that. So we'll see. But yeah, potentially, right? Errol, what's going on, man? How do you feel the housing market will perform over the next couple of years? I work in that industry, live in Florida, and the market here is still strong, but it seems like most states are expecting a crash next year. I know it's difficult to gauge due to each state performing differently, but what's your perspective on the health of the housing market as a whole? This is something I've been talking about over the last year, right? And we talked about the top being in, back Q2 or whatever, and then the pullback that we've gotten since then, which is, again, what I've expected. So if we kind of look at that, there's been some good pullback already in prices and whatnot. Most of the indicators suggest that there's further downside. I don't think it goes evenly across the U.S., just like the rise in prices didn't go evenly across, right? Some areas got a lot more significant rise in prices, in housing prices over the last 2 years or so. So I think those places, again, places like, Idaho, I think, some places in Texas, places in Florida, I think they'll probably be hit harder just because they had a harder rally, right? So if we think in terms of charts, right, when you have a strong blow off top, you get a strong reversal, right, immediately, right? And when you have a strong capitulation drop, you get a strong bounce usually, right? Same idea with prices there. I think we've still got some downside. There are some things that are starting to look like maybe they're bottoming out. But I think overall the indicators are still for lower. And in that case, I think it's the possibility to see maybe 15%, maybe 20% in the areas that rallied much harder. Potential drop, I think. So I think the buyers are getting a lot more opportunity, or will be in the areas that they haven't yet, to potentially buy. But the question is, are they going to buy? That's kind of where it really comes down to. A lot of people still have money, extra money off the crypto and stock rallies that we had over the last few years. So there could be money sitting on the side there waiting to buy into real estate, which would be good for sellers. But I think it's going to continue turning into more of a buyer's market for at least a bit longer. Like I said, in those hardest hit areas for rallies in price over the last 2 years, I think they'll see the biggest declines, potentially 20% or so off the highs. So, but I think other places that maybe didn't quite see as strong a movement, I think maybe you see maybe half that, maybe 10, maybe 12 and a half, something like that on the decline. So that's what I'm kind of thinking. But we'll see for sure, right? We'll see. Let me see here. Let me see. Kind of catch up with you. Terror says, here in Colorado, there are a lot more listings lately with price drops and sellers offering incentives. Entry-level listings no longer going to six figures over asking. Yeah, that's what we're seeing a lot of. Seeing a lot of that in the Houston area as well. Let's see. Did we just get a breakdown? Not yet, but it looks like we might here. So, yeah, in the Houston area as well, which is where I've been looking here over the last year, noticing a lot of the same. So I'm prepared for, potentially more of a drop coming in as well. But, what I've noticed, and it really kind of depends. It's not just the housing market overall, guys. It depends at the price levels as well. So what the Fed does affects a lot more those in the, up to like 300,000 area in most states, right? It's that lower end. They're affected a lot more by what the Fed may say or do, or what the government's doing. Is the government handing out, money or whatever? Those types of things tend to hit them a lot more. Those who are, 600,000, a million plus or whatever, they're not hit as hard, but you still see these things. You still see these price drops and whatnot. Again, looking at $4 million homes, in the Houston area, we're seeing drops of, recently here. Not really overly significant, maybe 100,000. But on 4 million, what is that? That's, somebody tell me. It's what, 2.5%? So not really a huge drop of any kind. Closer to the 800 to million, 1.5 million. You're seeing a little bit more substantial percentage drops than that, but still nothing like what you were seeing at the lower end. Because those at that higher end that can afford that, they're well beyond Freddie and Fannie, backed mortgages. A lot of them paying in cash. So they've got a lot more better positioning over there. So it doesn't affect them as much, but still you see that coming down with everything. Let me see here. Andrew says, our family's in real estate here in California. The big deal right now is the refi biz. Completely quiet and will be for a while. Yeah. Definitely see that. Hank says, luckily the American system protects the wealthy. Hank's always got his jabs, doesn't he? He thinks his poop don't stink in the Netherlands. Oh, man. Yeah. I mean, it is what it is. But we'll see how things go. There's no good system anywhere. And depending on where you are in the system, you'll see how you are or aren't getting fleeced by the government. At the end of the day, everybody gets fleeced by the government, period. It doesn't matter where you live. Everybody gets fleeced. The government is the only winner. So, it's kind of like going to the casino, right? Some people win, most people lose, but the house always wins, right? At the end of the day, right? Same thing with government. What's going on, Sylvia? Good to see you. Let's see here. Corey says crypto's moving, alt's getting smashed. Yeah, and again, we're about to potentially take out that low right here. I think we will. We're pretty close to it. So we look at this red count here, which maybe again looks for this move down. Measured move gets you down here around 18 to 40, 50, about that. If we zoom out here a bit, I think somebody's saying double bottom on it. Potentially it's pretty close, right? Let me kind of zoom out a little bit bigger time frame here. Let's see. The volume profile isn't very exciting as far as accumulation goes. There's a lot of spiking up through it still. I mean, overall, price has kind of gone down, or the volume's kind of gone down through the drop here, right? But if this is to be a bigger range, it could potentially be just fine. But right now, it doesn't look overly convincing as far as accumulation goes. It's not overly convincing as far as distribution goes yet either. So we really kind of want to see, do we, as we come down further here, do we find support and rally up? And then, of course, you want to see that breakout there, right? Right here on the daily, we've almost got as much volume as yesterday. And we're coming down that other way. So, of course, that isn't very, very positive there. 3-day current candle closes tomorrow, I guess it is. We're about to break down into oversold here. 3-day looks a little more interesting as far as potential accumulation goes. You kind of get this drop off into here. You see a lot of in this area here. You see a lot of fighting, a lot of volume coming in. But again, look at these. So you get this candle here, this nice large candle, this big volume. Next day you get this much smaller candle, though it did flip the other way on lesser volume. And then you have similar volume the next day, and it kind of dojis out, and then we go down bigger volume coming in. So it tells me that you've got a lot of supply still coming into this. So the question is, in that case, do we get an LPS, a last point of support here, before it rallies up, or do we actually potentially get a spring and then a rally up, which I think either way is possible as well, if this isn't going to be distribution. You just want to see, how does the market start showing up in this demand down here, which is kind of where we're starting to get to. You want to see demand really showing up strong in these areas to kind of tell the bigger players that the market's ready for it to go up rather than to go down further, right? And then what you'll look for on a rally here is you want to see a rally on lesser volume as you're rallying up here, right? A little bit locally. Because what that shows is there's less supply kind of coming in to slow you down. The idea of the accumulation range is that you remove that supply out of the market, right? So that supply doesn't keep coming down on you as prices rallying up. So that's what we want to see here. Remember, these volume here, it's not that it's buying or selling volume per se, because for every sell you have to have a buy. For every buy you have to have a sell, right? It can't operate on its own. It has to be transacted, right? The supply has to move from one to the other. But what you're looking at is, at those highs and lows, how is that particular volume looking, right? Are you getting a lot of volume at the lows? If you are, that shows that they're trying to sell into it. Well, a lot of volume at the lows, and then something like this right here, right? Where you get this big wick here. And what that tells you is they're trying to sell it down, but demand is overpowering them. Demand is coming up. And so you get this kind of candle here, and it says, okay, well, we'll go up a little bit. Same thing kind of happened right here, right? And then what you want to see, if you're ever coming back down to this low, you want to see that either volume drops off here and it reverses and heads up, or you want to see that volume's coming in heavy and it just can't break down. There's no follow through. That's what you're looking for. The first tells you that the big players, they start the selling up here, right, and try to get you through the resistance, the support, and then they let the market take over. So if you see it starting strong here and it peters out as it's getting down here, it's telling you the market's not interested in selling. If you see that it continues to sell strong down in here, but you're getting something like this, or some kind of reversal kind of type candle look in there, then that tells you that the market is not ready for it to go down any farther at that time. And often the selling power will abate, right? And you'll get a bit of a rally. Whether it's just a bounce or a full-on reversal, you have to wait and see. But those are the kind of things you're looking for as price kind of gets down to those lower areas, right? So, yeah. Let's see here. There we go. All right. So, again, we've gone down pretty low. Now, it doesn't have to break down. It is possible that this could still be an ABC down here at this very swing low. It's just a very deep wave too. And I think if we were to, if that was the case, it would catch people off guards. And I think you'd have a strong rally on the breakout up here. Just because at this point, everybody is expecting to go down further. Now, whether they mean down below the June low or not isn't really relevant here. What they're just expecting is the market is expecting a breakdown here. So if you see this rallying up, and you see it breaking out here above this 4-hour pivot, especially getting above, that swing high up here, all of a sudden you're going to see people jump on this. You've got people who've shorted here correctly, but they're not taking, profits here because they're looking much further down, right? So when that rallies back up into this area, all of a sudden they're underwater. And then other people trying to get in on the rally back up here, you'll see everybody else trying to get in as well that missed the initial drop. So if that continues going up, immediately underwater. So between them and these right here who are kicking themselves at that point, there's going to be a lot of short covering and whatnot going on here, which gives, price a lot of boom to head up higher, right? And so again, breaking through resistance, important resistance, is usually a third wave of a third wave kind of thing. And that's what we would kind of see here, right? So 1, 2, 3, right? So it'd be third of third. And right here, it'd probably be 1, 2, 3, right? So it would be third of a third of a third breaking through here. And in that case, you would normally expect to see some overextension, some rally, some harder rally up. So, wave 3 right there would probably overextend up toward at least this wave 4 area, if not, nearing kind of that pivot area there. If it were to break out, guys, I'm not telling you it's going to, but I'm just saying that's what I would expect if we saw getting up here for the reasons stated, right? That everybody's going to jump in and, they're either underwater immediately or they had a chance to get good profit here and didn't take it, and now they're underwater, so now they got to realize a loss. So they want to get on the other side of it and hope to God that they make up the money they just lost when they should have already taken it, so, kicking themselves emotional. So that's what I kind of see there, right? Keynes, what's going on? Good to see you. All right. So that's that. Let's check over here the DXY real quick. So the DXY, we've got two possibilities here. We did finally get a breakout higher here, so we're potentially looking at as fifth wave done. Now, again, the big implication for this being fifth wave done is this is the top for a while. Dollar's going to drop down below 100, probably get closer to 90, right? That's months of movement, right? And so what does that mean? Well, that means that we shouldn't expect that the Fed will be really hiking interest rates. We should expect that we'll be seeing something different coming from the Fed at that point, right? So maybe the pivot, right? The pivot everybody's talking about. Now, we've saw a potential catalyst for that with CPI. Again, this previous month, we were expecting it to be lower than it was previously by a good little bit, and it was, but it was actually lower than that. So there was a surprise to the downside that was even greater than what we expected, right? There are cracks in employment that we're starting to see, that we've been seeing over the last few months, right? Maybe they kick in as well, right? We've got the NFP coming up this Friday, guys. And you know what's really great when it comes to markets, guys? Here's the thing. NFP, the non-farm payroll, is coming up, right? The employment report coming up this Friday. As we lead into the Labor Day weekend, well, the markets will be closed here in the U.S., Saturday, Sunday, and Monday. And I'm going to tell you what, a lot of traders are out of the office early on Fridays before these kind of big weekends. A lot of traders are. So liquidity should be down, right? So we may see larger knee-jerk reactions, larger movements there. So potentially double topped up here, right? If so, this is just 3 waves down. So if so, this would have to be a 1, and then an ABC is a flat, expanded flat, and then we'd be looking for further down, right? So if I draw this in here, we would necessarily have to look at this as this kind of idea. Now, we're having a good sell-off at the moment there, but we want to see that kind of continuing on there, right? So, let's see here. So we get this 1, 2 here. We're looking for a breakdown below the swing low because that's B, right? You go A, you go B, and then you go C with that flat. And that would see the dollar then coming down here, targeting just below wave 4 here. Breakdown below wave 4, that hints that maybe wave circle or wave parentheses 5 is done here, right? So wave 3 would have this minimum expected target here of 107.503, secondary target of 107.122. Okay? And that's what we'd be looking at. But we have to see it breaking down below this swing low right here, this wave B, in order to say, okay, that's where we're headed. Until then, it is possible, this is an ABC, and so that this just becomes wave 1 of 5 here. So instead of 1 down here, this is 1, 2, 3, 4, 5 of wave 1. And that'd be wave 2. And then, that's a really small kind of pullback there. So maybe we'd look at this. I think I'd be better off looking at this as a 1, 2 of 5 here. Okay? So 1, 2. And so in that case, if that's 1 and that 3 back is 2, that gets you your wave 3 up here. Wave 3 of 5 of 5 of 5 up here at 111.322. And if that goes up, then we can probably expect more downward pressure on risk assets, right? Risk on assets like legacy, crypto, stuff like that. Does that make sense? LXT says DXY keeps me puzzled. Yeah, man. Me too. Right now, and usually that happens when you get to those major areas of reversal, right? Usually you get this point where you're confused because when you get to the major areas of reversal, it doesn't necessarily do this sharp up and sharp back down. It just kind of does this sideways, this distribution type area, right? It was just doing puzzles on chess.com. Let me see here. So let's look over here at the actual futures for the dollar futures here, right? And so if we look at this, again, this decline here isn't overly convincing as accumulation here, right? So do we look at this as a large distribution range, right? Do we look at this as distribution here? Do we sit here and go, okay, well, excuse me. So maybe this is selling climax down here. This rally up is, you get this area over here, which is your preliminary supply, right? And then you get your buying climax. It comes down to your automatic reaction, right? Rallies up here, pulls back, breaks out here to this up thrust, right? And then comes down. Because if I'm looking at this, remember what I was talking about on Bitcoin there, how it was kind of questionable about what we were looking at right there as far as volume-wise for accumulation and distribution. You see that same thing here, right? Except I would argue that it's probably even greater right here with the dollar because all these spikes are pretty close to where we were at the highs. The other one, they're a little bit further down. So, maybe semantical in terms of actually what we're seeing there, even though we're not talking about words, which semantics, right? But you guys get the idea. So this has me really cautious about that, right? So in terms of count, again, you get this 1, 2, 3, 4, 5, right? Slightly higher high. Breaks out in 5 waves above wave 3, we're done, right? That becomes your up thrust up there. Or your up thrust, up thrust here and then up thrust after distribution. So we should expect to move back down. We're overbought. We've got bearish divergence kind of coming across generally on the daily. So maybe 3-day, pretty close up here. Again, 3-day, we've had multiple areas of bearish divergence coming out. By the way, on the 3-day here, notice we've got a large doji right here, right? At the swing high. It just barely peaks out above the previous swing high doji. Maybe, right? If we're looking at the awesome oscillator here, like this right here where you have these lower peaks and you have the higher highs here, that's a bearish twin peaks and usually denotes that price is going to come down a bit. So there we go. We've got that. And then here we are potentially doing that again. Potentially bearish twin peaks coming out here. Say maybe go lower. We're trying to, we're starting to curl sideways, maybe down over here to cross, right? Weekly, you got a little bit more room here. We're up, almost bullish on Stochk RSI. But again, RSI itself, lower highs, bearish divergence. Are we getting now potentially this kind of lower peak here to give us this bearish twin peaks here on the weekly? Again, the weekly itself is doing this little doji thing here right now. There's still a lot of time to go on the weekly, guys. So way too early to, to pontificate on what's going on with the weekly, right? but definitely something worth watching. If the weekly ends like this, well, it's a pause, potential reversal. We'll see next week. Do we get, next week then, would we get a supply spread candle here, something like this, but just to the downside? If we've got this nice large candle here, doji, and then a nice large candle down, something like this or larger, that is a reversal pattern. And we would say this is topped out and coming down, in which case we zoom back out or zoom back in and say, well, yeah, it looks like, like we may be having distribution happening up here. And again, if that's what we've got going on there, guess what, folks? That means, that we've got this potential reversal happening, right? Which means risk on assets should start feeling some strength. So we'll kind of watch that, guys. Let me see here. Common Man, what's going on, man? He says, I appreciate that, buddy. He says, your opinion regarding U.S.-listed semiconductor companies, drama with China, Taiwan, specifically the leveraged ETF SOXL. Yeah, man. So I think semiconductors, it looks like they're probably getting a surplus right now. And so, this is something we talked about, right, with the whole pandemic thing. And I talked about this probably about 2 months ago, guys, where we talked about how a lot of this inflation that we've seen is driven by demand, right? Where we've got, or not demand, but demand in relation to the supply chain bottlenecks issues. It's the supply chain bottlenecks, right? And so what we tend to see in something like that is we see these strong upticks in prices, right? As everybody's kind of coming in, as it's getting skewed toward the end of that supply chain issue, right? And then as the supply chain cleans back out and drops back down, there's not that issue anymore. Then all of a sudden you end up having surpluses because companies are producing more and more as those prices are going up, and as they're having, as more demand appears to be there, the companies say, oh, we're going to build more to give, to sell, right? I mean, it makes sense, right? The problem is they overbuild, they overproduce. And so when those supply chain issues, start pulling back and they start not being the issue they were, all of a sudden you end up having this oversupply. And oversupply means all of a sudden we got to sell. And we got to sell at a discount because we have to get rid of it, right? We can't just sit on it. We've got to get something for it. So I think semiconductors are kind of in that state of, right now. I think they're, again, it was the big issue with the chips and everything, that hampered all the car sales and all this other stuff. And so they overproduced. And then all of a sudden, like I said, there was the article there, container ship backlog almost complete there at LA, right? LA port. Number of container ships headed for the California ports of LA and Long Beach. A traffic jam that once symbolized American consumer vigor during the pandemic declined to the lowest level since the bottleneck started to build 2 years ago, guys. Guess what? No more bottleneck coming in there, right? It says 8 vessels were in the official queue as of late Monday, according to data from the Marine Exchange of Southern California and Vessel Traffic Service, Los Angeles and Long Beach. That's an all-time low, down from 109, which was set in January, and about 40 lined up a year ago. So those of you that have been following me all through this year, you remember we kind of talked about that a few different times, and we looked at different charts and we looked at images, and how, remember at one point they were saying, oh yeah, look, the backlog's clearing off because the ships weren't within, within so many miles of the shore, right, of the port, right? And so as long as they aren't within so many miles of that, you don't count them as backlogged, right, or in the queue. But what we saw, remember with the image, was that we saw that they were just sitting out just beyond that area, remember? So it was, yeah, technically they weren't in the queue, so technically, that backlog was breaking back down, but realistically, they were really there, they just were just beyond the counting area, right? But now, actually, officially, we're low, right? No bottleneck going on anymore. So now we have two things, right? We have bottleneck being taken care of, right? And we have people spending less, which we know. We've seen those in the charts, right? We've seen those in the Fed charts, right? So now you've got, and the third thing being the overproduction of things when we were at the height of the pandemic there, right? And the backlog and all that. So now you have a ton more of things with no real backlog anymore, right? And a lack of people buying them. Guess what? People are going to have to sell stuff. They have to sell it for cheap. Now, with that happening, that leads to what? Companies are going to have to cut back, right? You can't continue. You got 100, you got 10,000 people working for you. You can't continue to have 10,000 people working for you if you're not continuing to increase sales, right? And as a matter of fact, if you're having to take losses, you're having to discount what you're selling, right? So your revenue is dropping significantly. Guess what? You got to start kicking out some of your workforce. I think Amazon's what? Amazon's 10% of their workforce they're going to kick now, right? So why do I talk about this? Because, guys, we may see that showing up in this one, potentially in this unemployment report, but maybe more so in the next one. And so, again, the Fed's mandate is unemployment, right? Keeping that low, and then keeping inflation at bay, right? Well, what can they do? If you're raising rates, making everything painful, which, he said, okay, we're going to do, right? Calling in Volcker from the 70s, right? Channeling him, right? But if you're doing that and people are losing their jobs and whatnot and spending less, means more cutbacks from companies and whatnot. I mean, what does the Fed do? Do they really continue to do that? What if the Fed is wrong? What if they've got these reports saying, okay, well, the inflation is due to demand, right? That's the product of too much money chasing too few supplies, right? Basically saying, okay, printing money issue, right? Well, what if that's not correct? Or what if it's not fully correct? What if a bigger part of that is what I've been saying? And all that stuff is all along there. Well, so inflation should come down. Remember what I told you. The Fed reacts. They are not proactive. They are reactionary. If you guys have not seen that over the last few years, then you're not paying attention. And so what does that mean? That means, okay, so they'll continue to try to do their thing until everything's already gone the other way, right? And then you'll have your little armchair economists there in social media going, oh, look, the Fed did this and caused this to happen. The Fed didn't cause it to happen. It was already happening. The Fed jumped in on the tail end, and then they make things worse, right? The Fed jumps in too late on the rising prices, makes it worse, right? Things start going down the other way. Guess what? Fed jumps in, whoop, does the other bit there, right? So, I think we've got a lot of that going on there. Let me see here. You were looking at SOXL specifically. Let me see here. Make a copy. Let's do this. SOXL. Let's see what they look like here real quick. So, I mean, that's overall what I'm looking at macro-wise. Oh, man, you're looking at 3-time bull shares, huh? Yeah, I mean, this 1 hour here looks like it's ready to rally up. I mean, it looks like you got 1, 2, 3, 4, 5. Potentially A, B, 1, 2, 3, 4, 5 maybe. Yeah. Let me see. What's that pullback right now? And you can see on the 1 hour here, we're doing some bullish divergence. Now, if you guys are playing with the 3X shares, whether they're bull or bear, please make sure you understand what you're doing. They are actively managed, which means they charge you a lot more because every day these particular things have to be rebalanced. So it's actively managed, so the costs are a lot higher. So this is not something that you buy and you hold for a month. You're going to lose money even if it's going in the right direction, guys, because of the fees associated with the ETF, okay? Now, oh man, we got almost a perfect 61.8 pullback there. Holy crud, guys, that's nice. So I'm going to just label this real quick here as what I believe may be a 1, 2, 3, 4, 5. And then A, B, C here. Now, if this is a 1, 2, or an A, B, C, I don't know. I haven't zoomed out enough yet. if it is a 1, 2, 3, well, I'll just go ahead and mark them both on here real quick. If this is A rather than 1, and this is B rather than 2, then C will equal A right here at around 25.64. So that kind of general area would be where I would initially look for a target. If it's a 1, 2, 3, then I'm going to look up here. You know, if we continue going through that, we can look up here at around 32.81. Okay? And this is how you trade, guys. Oops, went the wrong way on that. You don't assume 1, 2, 3, because if it doesn't get up there, you get here and you start getting pulled back and you're not paying attention to the idea it could be an ABC. Well, what are you doing for yourself? Not a whole lot, right? Now let's go ahead and zoom out here a bit. Look at all that volume. Look at all that coming down there. That's crazy. Now, your daily is not oversold. Stochastic RSI is oversold, though. You had this oh, it's not a bullish divergence there. Yeah, let me see, how far is this? If we get that as an ABC. So again, well, you know what? I'm going to go and put this here, 28.38. So wave C, we generally look for one-to-one relationship with wave A. So you know, that's just the basic Elliott wave thing. What I usually look for is 100 to 123.6. Is usually, if it's an ABC, that's usually my target. So let's do it this way. I'm going to put this alternate count in here that says maybe A, B, C to this range. There we go. Change all to black. So, I mean, this is kind of how I would look at this, okay? So I think, and look, we're almost at the S1 pivot here, high volume node. I think we get a bounce. I mean, minimally, I think you can go for a short-term target right here at around 1669. I think that's an easy target. But I do think we kind of, this looks like 1, 2, 3, 4, 5 is an any diagonal. So ABC down. Like I said, 61.8 retracement. If it's a wave C, you'll probably get the 25.64 to 28.38 range. If it's wave 3, you'll get the 32.81 target there. At this 123.6, that's the 50% retracement. Now, if we're looking at this down, again, to me, this looks like an ABC. Because if I'm looking at this, it looks like, I don't know, maybe. Okay, so yeah, so this looks like a leading diagonal here. This looks like A, B, C as 1, 2. So A, B, C is 1, 2. A, B, 1, 2, 3, 4, 5. C is 3, 4. A, B, C is 5. Okay? And so that gives us then kind of this diagonal looking thing, if that's correct. Let me just make sure that wave 3 isn't the shortest here. Yeah, clearly not the shortest down here. And so ABC rallying up here around the wave 4 makes a lot of sense. You get a wave 2 out of that. That's usually, you know, again, that wave 4 area is usually where you're looking for wave 2 to get up to, right? So I think it's probably more of a 1, 2 kind of thing, rather than an ABC, or rather than a 1, 2, 3. Now, I'm going to keep an open mind, because this is a bunch of overlap here. So I'm going to keep an open mind, but I think we're probably closer to that target area there than we are to the wave 3 up here. Does that make sense? So yeah, again, looking at this maybe as 1, 2, 3, 4, 5 is 1, 2. And then 1, 2, 3, 1, 2, 1, 2, 3, 3, 4, 1, 2, 3, 5, right? So wave C is an ending diagonal, so ABC. And then again, 1, 2, 3, 4, 5 gives us 1, 2, and then 1, 2, 3, 4, 5. Or, I'm sorry, 1, 2, 3, 4, 5. So you get a 1, 2, 3, 4, 5 here. Yeah, because if we do that, then wave 4 does not reach into wave 1 here. You know. Oh, well, it does encounter here, yeah, because it's 1, 2. Regular count overlapping here. Ending diagonal again gives us 3, 4. And then 1, 2, 3, 4, 5 is A, B. 1, 2, 3, 4, 5 is C. It really looks like 5 down like that, man. But yeah, I think we do get a bounce here, pretty quickly here. Oh yeah, look at that weekly. We're well up here. Yeah. That's a lot. Look at all that volume coming in here. See, and a lot of it picking up in this area here, which is right in this area, right? Which makes sense. Because that's that support, right? As it comes into it, so, yeah. Yeah, we'll look at the indices. Common Man, you're welcome, buddy. Sure thing. Yeah, leverage-induced decay. Yeah, read that as well. Definitely, man. Let me see here. Where is it? Let me find it here. Man, I'm going longer than I expected, but that's okay. I'll get in here, jump in here real quick. Let's see here. So we'll look at NASDAQ here real quick. NASDAQ composite, right? Let's see. All right. So we were kind of looking at the possibility that maybe, again, until we break out above this swing this swing high up here, the idea is that it's topped and this is a 1-2. If we're breaking down below 10.850.01, that's going to add confidence to the idea that wave 3 is in progress, right? And so wave 3, whoops. Well, let me just do it this way. Wave 4 is down here, so we should expect to get 5 waves down toward this swing low down here at around 6,700, right? 66 and some change there. At least, right? Now I don't have my what are they called? My fib extensions there on log. Let me do it this way. Still kind of coming out there. I don't think I've got on log, right? No, okay. But, if we're breaking down through here, my next target is this wave 4 support. Right here, okay? Now, that is the March 2020 low, guys. Remember the idea that, well, not for the NASDAQ, but for the other indexes, remember we had the expanding megaphone pattern, right? I've got the count I've got to get back together, but there we go. So this becomes A, B, C, just like a running flat here for wave 4. Whereas with the Dow and the S&P, or the Dow anyway, we had the megaphone pattern, right? Where we had it as A, B, C, D, E, with E being that low in March, right? But man, oh man, not really caring for the way this looks. Look at where we actually got here on this range. That's where we got rejected, around that area. So, again, guys, I'm looking overall for further down. The other idea was this was 1-2, and this was going to be a 3-4, but we're about to break into 1 over here, right? So that wouldn't handle that very well. Let's zoom in a little bit here. We should get a bounce soon. So maybe we get a bounce from unemployment on Friday, or maybe leading into unemployment on Friday. So, it looks like it could be 1, 2, 3, 4, 5. or 1, 2, and then working its way down here. I just want to go through these real quick, so I'm not want to really got to get into the counts at the moment. But key thing we're looking for though is overall down, black count, wave 1, wave 2, heading down wave 3. Added confidence if when we break down below 10, 850.01. But if we break out above 12, 655.84, then we start looking at the idea that maybe there's a bottom here, especially if we break out above the swing high here. It adds confidence to the idea that maybe there's a bottom there, and maybe this, that we're heading up in wave 5 here rather than wave 5 being done here. Okay. It's no different with the Dow. I mean, it looks a little different, but in general, it's the same kind of structure there, right? Oops, TJI, that's what I'm looking for. Let's see here. Yeah, so again, the idea that we are breaking down through that daily pivot. On the daily, we're almost oversold with RSI. We're oversold with Stochk RSI. So could see, a bounce down around here and a rally back up. And so then it becomes interesting, maybe, is this maybe an ABC as a W and an X, ABC as a Y? Is this somehow maybe 5 up here? So, we can explore that further if price breaks out above 33,364.70. If it breaks out above that, then we need to see a breakout above the swing high here. If we get that, then like the NASDAQ, it suggests that maybe this is wave 4 and wave 5 is in progress. Maybe. But as long as this 33,364 level here holds as resistance, and especially as long as this up here, wave 2 at around, the 65% retracement holds as resistance, we'll continue to look down, right? That's our big picture, right? Let's not get caught up with the unemployment coming up, and then the holiday weekend coming up, and then CPI coming out pretty soon after that. Let's not get caught up in the mid swing kind of trades there. I think either right now you're scalping low time frames or you're looking at larger time frames and you're playing that. I think that's anything in between that. I think you set yourself up to potentially get caught with what's going on. Let me see here. So now NASDAQ, Dow, and then what's the other one? S&P. Whoops. So let's look at the E-minis here. Man, same idea. See, breaking down here. But again, is this maybe some sort of a WXY kind of thing here? Or maybe even an ABC, Maybe we get a 1, 2, 3, 4, 5 here, and maybe this is actually 5 up. Why am I going up? Same thing though. You need to initially get above 4217.25. That opens up the possibility you may break out above the swing high up here at the 61.8 retracement. Right up there at around 43.2750. As long as this holds as resistance though, we continue to look at this as topped out in January. 1, 2 is done, 3 is in progress. But if we do break out above that, then we go, okay, well, maybe this is wave 4 and wave 5's in progress. And again, something like that would definitely align with the DXY being topped out now. But on the DXY, again, you know what you're watching there, right? So you can watch this from different angles, guys, different charts to kind of see, what's maybe showing a clearer move one way or the other, right? Let me see here. Let's look here at gold real quick. So here's gold looking to break on down here. But, what do we have going on? We've got this as an ABC maybe. Is it maybe a WXY, right? So A, B, and then C working on it. Move down here. If we lose the swing low here, which we're pretty close to doing, it looks like we're going to do maybe. Or even as a C, maybe this is 1, 2, 3, 4, 5, right? So I would look here at the 70.5 at 17.20 and 60 cents. And then down here around the 71.8, right there around the low, high volume noted about $1,700, $1,710 in that area. And then we want to see a breakout above wave B here. If we can break out above wave B at 1778.80, that adds confidence to the count and suggests that maybe wave B is done. but we're going to still want to see a breakout above the swing high up here, which is at the weekly pivot. Weekly pivot. So, that's what we're kind of looking at. Overall, though, for gold, still, I'm still looking for it to head down. Big picture, heading lower. Again, potentially heading below 1,000, but we're going to give it a watch here at around 1,300 area. Yeah, around this 1,300 area here. Again, it's possible. I'm looking at this as a flat. So this is A, this is B, and then we have 5 down for C, right? But with this breaking out above the swing high here, it would make it, we would expect to drop. If it's a flat, it would, an expanded flat is what we'd look for. And so we'd expect it to break down below wave A swing low down here. But the other thing is that it becomes a running flat, right? And a running flat, I would expect it to rally from this area here. As far as this goes, we've got kind of this support here, right? We've hit it a couple of times here, here again. How long does that going to hold? How long is that going to hold? I think if we're coming through it again, we crash on down through it, right? Potentially a double top here. Double top target gets us down around this 13 to 1400 area based on the height of that. So again, may only get down to there if we're going down and then create maybe like a, just a running flat, and then we should see some good acceleration up. So what goes on with the dollar, right? Is it possible that we could see the dollar and everything else kind of rallying all at once? Sure, I think it's still possible. But if we saw something like that, something crazy like that, I think that kind of really denotes, hey, the end of everything's going on and some big, huge kind of overall economic breakdown is about to happen. But, it's that last kind of final hurrah. Everything just goes kind of crazy, goes wacky. And then we enter into that huge depression, right? Potentially. But you know what, guys? If you're traders, you don't have to worry about, depression, stuff like that. Yeah, they suck and whatnot. But if you're a trader, you've got a chance to make good money during those times, right? As I pointed out, much money is often made, much more wealth is created in downturns than they are on the bull markets. Because you can buy things really cheap. And then they just kind of rally up the next bull market, right? Looking at, the weekly here, I mean, that looks pretty clear, like 5 waves down, right? So we'll see. Again, A, B, get a C up here to wave 4, right up here around 1871, 1875, 1880, right around that area. If this is one down, wave 2, that's always our first target, is that wave 4 the lesser degree. So A, B, find support right here. Right? This whole area right here. C up. Get you there. Breakdown comes in. So we'll see how that all works out. Right? So there you go, guys. That's kind of things I'm looking at. You know what? Let me jump into oil here real quick while I'm at it. Man. At least this streaming software is held up here. Don't forget, guys, I'm doing free signals all next week. All markets, stocks, Forex, crypto. I may even throw in some futures markets, guys. We may look at, E-minis, oil, gold, stuff like that. The more people that are following me, though, for those free signals, they're on TikTok, the more signals I'll put out there for you guys. It's just the way it is, man. Right? It's a business. So let people know. It's at Texas West Capital. That's the one there. Never thought I'd ever use TikTok for anything, but here we go, right? Oil does look like we're getting rejected here, right around the 78.6 retracement. I've got this potentially as a, the big wave 2 up here, and then locally as a 1-2, 1-2, right? And then, so wave 3 is in progress as a 1-2, 3. Minimum expected target down there at 74.30. Again, if the economy is not doing so great, if production slows down, travel slows down, which it is, right? Where's the demand for oil? Right? There's a lack of demand, in enough quantity for price to continue rallying up, right? So if I'm correct in what's going on with the economy, well then, hey, we'll look at lower oil prices. It doesn't make sense otherwise, right? But we have dropped down below this 91.08, so that's going to hint that wave 2 is maybe complete. We're looking at this as a flat, right? So A, B, 1, 2, 3, 4, 5 gives us C there. So our next goal is a breakdown below 85.73 here. If we do, that opens up this 74.30 target for wave 3. Hey, LXT, I never thought I'd install TikTok either. This is what I get for listening to social media people, right? Social media marketers and whatnot. But it is what it is. We'll try it. We'll see how it goes, right? Balanzar, what's going on, man? Give it an extra hour of streaming as reward. Yeah, I wish, man, but I got to go. The free signals, Poison. Just go back to the beginning of the show here. You'll see it. Basically, what I'm going to do is next week, I'm going to be, because we've just launched these signal services here recently, I'm going to go ahead and give out a whole bunch of free signals next week. The more people that are following me there on TikTok, the more signals I'm going to give out. They'll be for everything: crypto, stocks, Forex, and then maybe even futures as well. Gold, silver, contracts, futures, contracts. Like I said, the E-minis for the S&P, stuff like that as well, potentially. So just to kind of show you guys how it works and what's up with it. And I may even do some stupid price for it in case you want to maybe try it out for a month or something. Maybe. We'll see. We'll see how many people are following me. All right, guys. Yeah, it's me and Adam running things now. Yeah. Again, looking at getting some analysts in here by the end of the year, and then they'll do the daily updates and stuff. Like I said, the other thing I'm looking at doing here, guys, and let me know if you're interested in, but something, some kind of trade with me thing, right, where we kind of spend a couple hours in the trading room on the daily, and we trade something. So I would have to figure what kind of interest we've got in there, see what we could trade. But I'll use, my system that I use to trade to enter and exit, and you guys can trade along with me if you choose. And as well as releasing that course that I'm putting together, which actually explains to you my system, what I actually use to trade in and day out. With my rules, my everything that goes with it. So lots of stuff going on, man. Okay, guys, listen. Yeah, let's jump at TLT here real quick. I keep having to go here, but I was actually thinking about doing that earlier. So TLT, quite potentially, looking at a bottom here, right? And then a rally with a 1-2. I've got a 78.6 retracement. Need to see a breakout up here above 116.75. That should add confidence to it. If we do that, that gives us that minimum expected wave 3 up there at can't do it here. Yeah, right up there around 131.11. All right. So if we can get the breakout above wave B and then fall through above wave 1, that's our wave 3 target. If instead we break down below the swing low here at 108.12, well then, we're looking lower. The count's kind of invalidated there, right? What do we have sideways here? This is the weekly. You can see we're coming off the overbought area down there. We are finding support here we're finding a range here between the S3 and the S2. Nothing overly convincing happening at the moment. There was a good candle right here that says, hey, up. And so we got to pull back about halfway into the range of this wick here, as we usually do. Rallied up, resistance at the top there. Pulling back now. Looking at it on the weekly, it looks like there's an argument that it could be, a WXY or an ABC here. So we'll want to see if we can do that, if we can head on with it. Monthly is down here, oversold, pretty close to it, then oversold down here, though. You can see how volume's that volume is escalated on the way down. Do we potentially just have 1, 2, 3, 4, 5? And then we get an ABC up here, maybe? Down. So, remember, this is bonds, guys. We're looking at how they're, doing here. And generally, if bonds are down, usually stock market's up, right? So here we go. This is that March drop, right? This was the March drop, right? Everybody got scared, went into TLT. And now as the market rallied off that March 2020 low, right? But of course, the market just rallied up into this area here, up into, depending if you're looking at NASDAQ, or at the NASDAQ, which was November of last year, it topped out, or January of this year when the S&P and the Dow topped out. So this kind of came down, as they were rallying up from that. Here's that March low, right? So they rallied up to new all-time highs. But this is the thing. What's going on here? We've dropped, right? Which should say that stocks are going up, but they're not, right? So again, when we look at stocks, is it really a leading diagonal down and wave 2 finished, or are we going to have overall some sort of sideways, maybe a slight dip lower as this rallies up for 3 waves? And we have 1, 2, 3, 4, 5 ABC. So this is 1, we'll get a 2, and then a 3. So keep watching these things for sure. So it really just, again, and that's why LXT, why you're having trouble with the dollar and a lot of other things right now, because we're at this major point here. Is it the top? Is it this reversal for the dollar or not? If it is, then this other idea that maybe the TLT is showing us here with potentially 5 down, maybe we are headed down lower, headed up higher with stocks and whatever to a new all-time high. And of course, that would be crypto as well, right? Again, looking at tech stocks would pull back 78.6 or 85.4, right? So they're already way down. So if this is only wave 1 and then wave 2 is done and wave 3 is coming in for stocks, NASDAQ, everything, well, what does that mean for tech stocks? Do they all just go to 0? You see, it doesn't make a whole lot of sense, right? So yeah. So we'll see, guys, right? All right, listen, I'm going to get out of here. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. We'd love to see you guys over there. Join us at, in Discord at howtotradetowin.com. You'll learn a lot more about trading than you ever thought possible in a pretty short amount of time, actually. We got hundreds of hours of educational content on there, guys. You can watch at your own pace. And then, of course, like I said, everything we got coming up, right? So we'll see how all this goes. I hope to God you guys have an amazing week, with trading and everything. But just be careful as you run into Friday. We could see markets just kind of continue trending in a direction until it gets to Friday, and then all of a sudden see some strong reversal, or at least trending from maybe Wednesday evening into, Friday morning until those numbers are released. But I would expect volatility, especially within an hour of the release, and then heading out after that. So be careful out there, all right? Hey, guys, listen, I won't be here Monday. Oh, wait, no, we don't have it to Monday, so I don't care, right? I'll be back Tuesday after Friday. I'll be here Friday. We'll talk about the numbers and everything. And then, we're taking a 3-day weekend there, celebrating Labor Day, and then that's it. All right? Okay, guys. I hope you guys have a great week. Y'all trade safe, and I will see you then. Take care.